Deputy, no, do you wish to come in? No, Deputy Morgan.
Thanks for that second part of the presentation, I suppose, Peter, and whatever about the Department of Finance and the Minister. Certainly, I think this committee has given you a fair opportunity to air your fairly controversial views in terms of mainstream thinking. Very brief, I'm wondering, what's your best case scenario in terms of wrapping up Anglo? How long would it take, approximately, if the decision were made to wrap it up, including negotiation with bondholders, etc.?
My experienced judgment in this, and I've talked to other people with experience and judgment, is 4 to 5 years. Because there are some workout time scales and whatever to be gone through. But in terms of robust decision making, robust negotiations, open, honest, transparent, that's the sort of time frame it can be done. If there's a will, there's a way. At a cost of less than 17 billion less than what has been proposed at the moment. Just to recap on the meeting of 16th of June, Alan Dukes, the chairman, presented his report. It should, of course, have been Donal O'Connor. Donal O'Connor was chairman. He'd been on the board since June 2008. And it was June 2010 when he retired, or handed over to Alan Dukes. With his experience from the accounting world and from his positions held in many things, he should have been presenting that report.
Just to answer the questions that have been asked, please.
Well, you asked me about Anglo, and this is very relevant to Anglo. Sorry, it was Deputy Fahy. The Chief Executive, Mike Ainsley, admitted, albeit reluctantly and delayed, it could have been admitted much earlier, that 22 billion of irrecoverable loan losses were embedded in Anglo. And that's not right. It's 32 billion. And I can prove that too. And I don't want to clutter up your minds here, but it's 32 billion. And I said it to Mike Ainsley on the Monday following that presentation of the 16th in his office.
Can you break down the 32 billion?
The breakdown of it? It's very easy. There's a 72 billion loan book in Anglo. They admit that 36 billion is being transferred into NAMA, and it will have loan write-downs of not less than 55%. They have a remainder 36 billion, comprising 12 billion of what they say could be a residual rump of goodish loans to form a bank with 2.5 billion capital, and the remaining 24 billion is not performing satisfactorily and would be wound down. I think any expert who knows the composition of that portfolio and the clients involved and the businesses involved, as I do and others do, would know that of that 72 billion loan book, the most that will be recovered is about 36 billion. That has to be deployed to pay off customers' deposits, bank deposits that don't fall within the guarantee, and then, if there's anything left over, to pay senior and junior bondholders. Another point brought up at that meeting on the 16th of June was that they had made a profit, Anglo had made a profit of 1.8 billion on what they called a liabilities management exercise, buying back bonds with a face value of 2.4 billion and using 600 million cash to buy them back. And that therefore they made a profit of 1.8 billion. Anybody with experience knows that the people who held those bonds and sold them back for 600 million would regard themselves as having made a profit of 600 million because those bonds are effectively worthless. Anglo is so deep in deficit, it should be closed. There is no argument for keeping it open. No logical argument. And the same for Nationwide.
Costello. Very much, Mr. Mathews. I have to agree with you. There's no logical argument for keeping Anglo-Irish open, and I don't think we've really seen the bottom of the pit even yet.
Costello, if we close it, we will actually then get to see it.
Eventually, yeah. And I have to agree that I'd like to see a situation where all the board members should have to resign indeed right across the AIB, Bank of Ireland, Irish Nationwide, and Anglo-Irish, of course. But, and of course, the guarantee, we would say, has been thrown far too widely to include both Anglo-Irish and Irish Nationwide, both of which are effectively zombie institutions. But, you know, can the tide be reversed? Can the situation be reversed? You can say that it can effectively be reversed if the will was there to reverse it. But there certainly doesn't seem to be the political will to reverse it at the present time. And I can see the government going out of office just immediately. So by the time that the political changes would take place, NAMA would have conducted all its business. Presumably it would have purchased all the portfolios, and it would have been so deeply engaged in the work that has taken place that effectively there would be no going back.
You know, sorry to interrupt you, Deputy Costello. You know the old term in business, sale or return. This is a situation of it's sale or return. Get them back to the banks, capitalise the banks and direct the banks properly. And it's not wasted money to professionals. It's actually been a learning experience.
I have a problem in the sense that legislation has been put through in relation to NAMA and the guarantees, and there is a difficulty in that respect. That is the law of the land. But just to look at it, if NAMA does provide purchases all of those portfolios, and whatever it pays for it, we can argue about that, paying too much already. But does it not effectively recapitalise those institutions? I don't think there's anything can be gained from the recapitalisation of Anglo-Irish. I don't see it ever as being a functioning bank, but certainly in terms of Bank of Ireland and in terms of AIB and indeed the EBS. And as a result of that, it's recapitalisation by the back door, so to speak, because the bonds will have been transferred to the banks. They will have encashed them with the European Central Bank. They will have got cash into their hands. They will effectively be recapitalised, and they should be in a position to do what you are saying, even though it has been an expensive exercise. So will the effect, my question is, will the effect be the same? Except that it'll be a more expensive way of going about it, and it'll be a slower way of going about it.
The answer is no. The bonds that are issued to the banks by NAMA are not encashed at the ECB. No, they're not. There's a technical misunderstanding by so many people. The bonds in the hands of the banks are an asset that qualify as security, collateral, for loans from the ECB. So they have to bring those bonds to the ECB like a watch to a pawnbroker, and they are accepted as security for a loan from the ECB. And there's nothing requiring the banks to bring those to the bank, to the ECB.
The loan can be transferred into cash. If
the loan is cash at a price.
No, they get the bonds. They can then go to the ECB. They can come out with cash from the ECB. Isn't that a fair?
No, they get a loan, if they wish. They get a loan of about 80% of the face value of the bonds from the ECB, and that loan has interest rate. It has to pay 0.5% above the ECB rate. That's what the banks have to pay for the loan that they'll get for offering the security of the bonds.
So what else can they do with the bonds other than go to the ECB and come out, even with a loan? It still is cash.
Hold the bonds, because the bonds pay an income of, I think it's 1%. Don't hold me to this, because I've had so much in my head at the moment, but it's over 3-month Euribor. So the banks actually get income off the bonds, the NAMA bonds.